I mean, people are contributing the moves we've seen in the incredibly gigantic, very liquid bond market to Bill Ackman's little blog post here.
Yeah, he said today that they covered the bond short in between 9:49 a.m. and right now, 1:37 p.m. You've seen a 15 basis point move in the 30-year bond. This is the bond that he said that he was shorting. Now, what's interesting about this, Matt, too, is if you take a look at just how much that yield had moved forward to 5.17, you are actually well below where he said in August that he thought it would go. Remember, the reason he is taking off this short position now is he says there's too much risk in the world to remain short bonds at current long-term rates. The economy is slowing faster than recent data suggests. So that implies worries about a further bid in the bond market, perhaps a haven bid as the economy starts to slow down. But we are well ways off from that 550 that he said that it could reach, given the supply dynamics he is seeing in the market longer term.
And Sonali, should we prepare for more of the Wall Street Titans you track posting their views on X on what they feel the bond market outlook looks like at this point, only because this did really feel like the Ackman effect in a market that was, at least we saw in the equity worlds, was deeply in the red to start the trading day.
Yeah, many big bond traders have certainly taken to X to voice their views about the direction of travel in bond markets, and not just treasuries, although treasuries have certainly come center stage. You know, you look at Boaz Weinstein, who just months ago really took to Twitter in a much larger way, also talking about CDS markets, but also Jeff Gundlach I would keep an eye on as well. Bill Gross has also been taking to Twitter, or X rather, to voice views on the bond market.
We can call it Twitter. On this program, you can feel free to call it Twitter.
Yeah. But yeah, these are very specific views, and you have to also look at the timing here that was interesting. When Bill Ackman initially made that comment on X, it was really days after the Treasury had already boosted their expectations for quarterly funding, and you think about the increased demand since August already in terms of how much what he was talking about may be exacerbated. So I think it's really worth noting the rationale and not just the call itself on this idea of why he is taking off the short position and why he thinks it will go to 550 and whether he still thinks, frankly, it'll get there.